Hello, and welcome to the 16th episode of the Markets at a Glance series. My name is Rufas Kamau, Markets Analyst at FXPress. So once you join in, kindly confirm by saying hi on the live comment section. Also, happy Valentine's, everyone. I hope you have had a good day, and I wish you enjoy the rest of the day. Remember, it's a day of love. So at the same time, in the markets, we're expecting one of the biggest events in the news this day and also this week. And this is the US inflation data. So we will be looking at the CPI, or the consumer price index in the US. And this is expected to cause a lot of volatility in the markets. Some of the key markets that we're expecting out of volatility include all currency pairs that have the US dollar. We also be expecting high volatility in US indices. That is majorly the S&P 500, the Dow Jones, the Nasdaq, as well as the Russell 2000. At the same time, we expect high volatility in commodities, so gold, silver, and oil prices are expected to be very hot. So with this in mind, now let's focus on the exact time that we'll be looking at these news releases. So first things first, let's look at 4:30 p.m. So we'll be expecting 3 separate news. So the key news that investors will be focusing on is the CPI. So the CPI will be released at 4:30 p.m. In the previous reading, there was a contraction or a slowdown of -0.1%, meaning that there was inflationary pressure in December. Then in January, the expectation is that inflation steps up by 0.5%. So the CPI year over year is basically a comparison of the consumer basket in January versus January last year. We see that there is a huge change of about 6.5%, and this is the annual inflation. And this was as of December last year. So for January's data, we're expecting that the reading is about 6.2%. So investors will be comparing this amount with the actual outcome. So if inflation is hotter than expected, that is above 6.2%, maybe towards 6.5 or even higher, then that would prompt the Fed to get more aggressive with rate hikes. And this would be very positive for the dollar and very negative for equities. And on the other hand, if inflation is at around 6.2% or even lower, then in that case, the Fed will proceed as planned, go for another 25 basis point hike, and these would eventually weaken the dollar and lead to very strong increase. So that's one of the expectations in the market. Also, when you look at the CPI without food and energy prices for the core CPI, then in the previous reading, it was an increase of 0.3%. We expect this inflation to rise even higher by 0.4% in January. So these 3 data points are very important in making a decision of where the market is going next. So a lot of investors will be focused on this to trade the CPI news later today. So an interesting perspective is that once the news is announced, we'll be seeing a lot of volatility, a lot of trading, and also potentially some trading opportunities. Then later on in the evening at 7 p.m. and also 7:30 and 10:05, we will have 3 different Fed members issue different speeches. So Fed member Logan issue a speech at 7 p.m. Then we'll have Hacker presenting a speech at 7:30. Then 10:05 will have Fed member Williams. So remember, all these are voting members of the Fed. So if they have a reaction to what happened with the CPI, then this might also cause some market activity. So we'll be looking at the 3 data points and also the 3 speeches to make a decision on how to trade the rest. So as we head into tomorrow, you're looking at the Reserve Bank of Australia's governor issue a speech. This will be at 4 a.m. Then in the morning, that is 10 a.m., looking at the CPI or the inflation data in the UK, which previously stood at 10.5%. We are expecting that this has slowed down to 10.3%. So as we approach the end of the week, we look at core retail sales from the US, Empire State Manufacturing Index, as well as retail sales. Then a speech from ECB President Lagarde. Then employment change in Australia, as well as a core producer price index in the US on Thursday. Unemployment rates in the US, the Fed Manufacturing Index. Then towards the end of the week, we also get another speech by RBA Governor on that Friday. So towards the end of the week, German PPI is a producer price index at 10 a.m. Then retail sales month over month at 10 a.m. before we close the week with a speech from our FOMC. So as you can see, we have a lot of news happening in the markets this week, but most importantly is the data that is coming in a couple of minutes. I believe this will be 23 minutes. So as we progress with the presentation today, I want to make sure that I end the session early so that you will be able to trade. So if you are a trader who is interested in participating in the market during the news series, then you have sufficient time. So you'll be looking to end this at around 4:27 or 28 around there. Then 9:30 focus on the device that will come with the news. So on other news, there's quite a number of things that we're expecting. So one, we have seen the government of Japan nominate Ueda as the next Bank of Japan governor. So this has not been approved yet. So in details, Japanese government on Tuesday presented Kazuo Ueda to Parliament as its nominee for the next Bank of Japan governor. So putting the academic and former member of the BOJ's decision-making body forward to replace Haruhiko Kuroda in the first leadership change in a decade. So remember, Haruhiko Kuroda has been chairing the Bank of Japan for the last 10 years. And now, as he's looking to leave, there's quite a number of worries about the Japanese economy. So one of the worries is that there's a slow economic growth. And the other one is that inflation is on the rise. Recently broke the 4% level and is currently rising even higher. So the new governor might be faced with a completely new set of challenges that was being faced at the beginning by expecting the Bank of Japan pivot, and as I've mentioned in earlier sessions, is that there's a potential that we'll be looking for a wrong position in JPY pairs. So besides these, ECB's macro says how China reopening impacts inflation is an open question. So yes, China has reopened, removed all COVID-19 restrictions, and now it's bound to create an environment where operates really well, an environment with low interest rates, low inflation. This is a good environment to increase and drive production even higher. These will have some impacts on several global economies, one of them being the Eurozone. So products coming from China being cheap might also add inflationary pressure to ECB or even to the Eurozone. So the ECB is considering that as a factor in their model, trying to project where inflation is headed. So besides this, that's this still on Japan. So I just want to show you the brief highlights. So GDP up by 0.1% in the Eurozone, and the unemployment is also up by 0.4% in the Eurozone. So whenever you see an aggressive central bank hiking the rates, then unemployment tends to go in the opposite direction. In this case, we start seeing it rising. So it's a very unwanted scenario that the ECB doesn't achieve. So you don't want unemployment rising when you have all these problems of war in Russia, Ukraine, and high energy prices and all that. And now unemployment is rising. So it's quite a challenge, but GDP is holding up just well. So among the key highlights for the day is that there's a big cyclone happening in New Zealand, which has affected a third of the population. So the New Zealand economy has been set under a state of emergency. So we will be following up closely the developments in this one. We might be seeing the market reacting to this later in the day. So potentially it's a good story. It's not a good story per se, because it's a bad event happening in New Zealand. But from a trader's perspective, it's one of the factors that we ought to know and learn the development so that you can put your positions in order. So Britain loses 2.5 million days to the worst strikes since 1990. This is during Margaret Thatcher's reign. So during last year, there was a lot of strikes that was happening across different industries. Some of the key highlights was truck drivers, nurses, doctors, and teachers. So with all these strikes, means that these people were not working, they were not contributing to production, and the entire economy lost about 2.5 million days. So this was a big thing, and it's bound to have an effect on the data that we are receiving today, as well as the economic output of the UK. So the potential for the UK getting into a recession gets even worse once you add this factor. So among the key highlights for yesterday or last night, towards the close of the market, was that Palantir Technologies, one of the top AI companies, managed to turn a profit for the first time since it was listed, basically reporting $0.04 per share, revenue of $508.6 million. So the consensus earnings estimate was 0.03. So as you can see, this was higher than expected. And of course, the revenue was also a bit. So it was a big surprise in the market, but at the same time, they wanted to revise their expected outlook for this quarter and for the year downwards. So it's quite worrying for investors. So if you look at the share and how it performed, in after hours trading, the shares were up 16.8%. So we'll be expecting the stock open the big gap towards the upper side, significantly around 16.82% or at a price of $8.89. So the closing price yesterday was 7.61. Now we expect the market to open at 8.89. Then from there, we don't know whether the market will continue moving higher or even reverse the entire trend. Also, the trading of this particular stock could also be affected by the CPI data. So that's one of the key things to consider in the markets today. So I'm hoping I've given you all the highlights or basically the markets at a glance. And once you understand this, then it's easy to identify trading opportunities. So if you want to draw more insights from the cyclone happening in New Zealand, I'll be sharing a link on the live comment section so that you can go through it on your own time. So in just a moment. So there goes the link. Hi, Kangara. Hi, Christopher. Hi, Fred. And thank you for joining the session as well as responding. So as we progress to the next part of today's presentation, so remember, we always try to look at the key price levels. So this will be the next part of today's presentation. So remember, the major news that we are expecting today is affecting USD pairs. So let's start with Euro USD. So Euro USD has been on a bullish market for quite a period of time, with the bottom happening in September. So remember, it was a multi-year bottom. So for a couple of years, market was continuously down. If we were to check on the daily chart, you can see the bearish market from 2020, 2021, 2022. Then towards the end of the last year, here in September, we started seeing the market begin to recover. So from the forward chart, this is what we've had, market making broad swings. And now after getting to this bottom, this was towards the end of last week, we can see that the euro has been very strong this week, managing to rally from this bottom all the way up. So from the news today, the market happens to present a big divergence from the expectation. Then there's a good chance of seeing the market retrace the last week's high, 1.0794. But on the contrary, if the dollar happens to strengthen, then we might be looking at last week's low as a potential target for Euro USD. So for Pound USD, there was this range that was happening here a couple of weeks ago. Before the market broke to the lower side, it tested and proceeded to lower, then went up and then low. And we saw this as the lowest price on Friday. Sorry, lowest price on Friday here and then on Monday here. So today being Tuesday, we are seeing the pound continuously move even higher. So price target might be around this area here, 1.659 or even higher. And if the price manages to in the opposite direction, then yesterday's low might be a very nice target. So for Australia, we can see the overall price level for the daily chart was majorly bearish. Then a very strong recovery from October. The market has been going up, met a major resistance level here. You can see the resistance that we saw here in August. Same resistance towards the beginning of this month. So from the forward chart, after meeting this resistance twice, market went back down, broke the lower trend line, went up and then down, and now we have a potential swing where the market could either retest this high last week or even one day's low right here. So if you identify the key price levels here, I would say 0.69. So 0.69 seems like a nice target. And also this particular high here is 0.7. So USDN, you can already see it was on a very strong bearish channel, broke to the upper side here, made a swing down and then a swing up. So 132.878 seems like a nice target. Break higher, 134.682, and at the same time, if the market was to change, remember we don't know the outcome of the news, so we are open to either movement of either direction. So we'll be looking to process the news to know the direction the market is taking. So 134.682, 129.81. So as for the US dollar against gold, remember was a very strong start to the year. The bottom was experienced in September as well as November. Then we went for a very strong bull run in gold before the market started downwards. So what we are seeing here is a market that has been cruising down strongly and some further momentum downwards. If you go to a smaller time frame, you can see the patterns, a sideways pattern. So you are looking at an inverted flag here, breakout to the lower side, which proceeded to become another consolidation zone as we await the news. So once we get to the news at 4:30, eventually we could get a rally and test last week's high of 1890. But then if the market breaks further downwards, then a very important target would be 1825 price level. So US 500 managed to form some flag formation here or some bearish channel, has already broken the upper side. So potentially the break even higher, get 4194. But then if the equity weakens, then we see the market retesting last week's low of 4,051. Sorry, so 4,051, 4,194, which is the previous high here. So for US30, we are trading at a major resistance level. So I would be more interested with a swing back down. So if we see the equities weaken, and then the target will be on the lower side, towards the lower trend line. So this would be a really nice target to consider, around 33,800. So sometimes when you have a support such as this one, so you look for the round number around it. So the round number around this area is 33,800. Would be a very nice target to go for. But then if the market breaks this high, which is also a high of January, then look at the high of December. So the potential target here is around 34,940. That is if there is an all-out equities rally. So US Tech 100 are forming a similar bearish channel. Now we are testing the upper limit here. So if the market breaks, then this other high around the upper trend line is very important. Just to give you a perspective on the blue line, you can see that it has been followed for quite a period. So if the market breaks here, it might be testing this blue line here. So if I go to 1 hour chart, then we mark the price levels. One appears to be around this area here. So 12,786. Then on the lower side, we're looking at this support here. So 12,786, 12,204 being the prime targets for the US Tech 100 index. So one appears to be along two trend lines, and the other one is just the most recent support here. So UK oil, very interesting. Bullish channel, look at the two red lines here. This is on the 4 hour chart. So a break higher, might see the price of oil trading at $88.6 per barrel, and a break lower, we might be looking at $82.8 per barrel, representing low of mid last week. So dollar index clearly trading sideways, so we could be seeing either a break downwards or a continuation within the pattern. So UK 100 or the FTSE 100 index testing a key resistance in the last couple of hours, already managed to face some very strong rejection. So we could be seeing the index back down. So a nice target would be along this trend line, somewhere around 78.91, and also this resistance here around 79.10. So this one seems quite a wide range. So if you manage to get a short selling position, then target area of around this region is. So USD CNH, that is the Chinese yuan or the renminbi. A lot of sideways momentum. This is for 5 straight weeks. Then towards the end of last week, there was a break outwards towards the upper side, and now you can see today is majorly sideways. So this is a wild card. So if I was trading this, I would be looking at these lows of last week, the highs of last week. Actually, this is the high of this week. This was Monday. So potentially a break higher or even a break lower makes it a very simple and easy way to identify potential movements for USDCNH. So Hong Kong trading in some form of triangle. So started the year strongly, all the way from October, November, December. The Hang Seng Index has been very strong. In January, showed some very strong resilience before changing direction in February. However, there seems to be a very strong resistance support level here around 21,029. So notice how it has been tested a couple of times and has not yet broken. So if you go to the 1 hour chart, you can see there was a slight time when it was broken here. That was during the opening of the market this week. But the gap was crossed quickly and the market resumed the same pattern. So 21,059 is the support level. So if there's an outright break, I would be watching this particular trend line for some break higher. And at the same time, I would be watching the lower trend line here. So for a potential break lower. So a break lower would present a much better opportunity because the support has been holding for so long. So a break would basically mean a reversal of this particular pattern here. So we have already broken the lower trend line. So some further breakout below 21K would represent a short selling. So that's it for today. I don't think there's anything else we need to check. So there's also Bitcoin. Bitcoin having made this particular pattern here, but lasted a couple of months. So I would say from June, July last year, all the way to January this year, I was trading in this almost sideways momentum before making this very strong rally in January. So the strong rally was so good that it made around 30% return this year. And now you can see the pullback that happened here. So after getting to that high, Bitcoin was unable to form higher highs. So what we are seeing from the price action is a market that is now attempting to go further back downwards. So there was a trend line here that was holding really well. So on one side, Bitcoin price was moving higher, forming higher highs. So it's almost like some form of a heart pattern. And now we are seeing some reversal, where now the highs are getting lower, the lows are getting lower, and perhaps some completely new pattern is forming. So in this case, towards the presentation of the news or the announcement of the news in the CPI, I would be expecting either Bitcoin pushes back and recovers the losses that it made over the weekend, or it pushes further down to retest this week's low. So this week's low is just yesterday's low. So this is an interesting area. So 21,341, and also some good rally along this trend line might be very interesting to watch. And this is for short-term intraday trading at 22,448. So New Zealand USD are still trading sideways. So remember, we mentioned there's a very big cyclone happening in New Zealand. So the economy is under lockdown, or what we call a state of emergency. So whenever you see such events happening, then it's not very good for the economy. The demand for the New Zealand dollar might be on the lower side. Investors might be trying to exit that market due to that risk. So in this case, if the dollar happens to be quite vibrant or quite volatile as a result of the news, then a nice target would be New Zealand USD, perhaps trading a recovery or a drop to previous low. So previous low is easily identifiable here, around 0.62696. This could be a nice target. And at the same time, if the market happens to weaken the dollar, then we could be seeing the market break this pattern here and move even higher. So perhaps a target of this area of 0.64136. So that's it for today. Thank you very much, guys. Thank you for your time. I really enjoyed this session. You're ready to trade the data release. So if you're just a beginner and you've never traded news before, I would suggest to do this on a demo account. Don't risk the money, just sidelines and now plan how news announcements affect the market. If you are pro, then well. So last things that I almost forgot to mention, this is not investment advice. It's not a recommendation to trade. It's very educational to help you understand some of these concepts and identify key price levels. So that's it for today. Thank you, and I hope to see you in the next session.